We have some data coming out from Zillow recently reporting on residential real estate investing. And we know that whenever something's about to happen in the housing market, the investors are usually the ones that know first and usually act upon it first. And so whenever we see changes happening on the investment side, us as retail buyers need to take note of it. And hopefully this will shed light more on what's happening in the housing market and when home prices will truly go down. So we're going to look at different charts, different data, just talking about what's happening in the housing market according to Zillow. All right here, Zillow is reporting that residential fixed investment decreased by 4.2% from the preceding quarter as new single-family construction and brokers' commission continued to decline. So here's essentially saying that this type of investment, which I actually have a rental property that's fixed, that has a 30-year loan that I'm renting out to people and they pay off my loan. And on top of that, I get cash flow. So they're saying that amount of real estate investing is decreasing, right? And on top of that, it says construction and brokers commissions continue to decline. So they're seeing that mostly on like the brokers, the agent side, that their commission is not as high as it was previously or the quarter before. Residential fixed investment fell in the first 3 months by 4.2% from the last quarter of 2022. So this is the first 3 months of this year compared to the last 3 months of 2022. This consists of purchases of private residential structure, new construction, improvements to housing units, brokers' commissions on the sale of residential property and residential equipment. It was the 8th consecutive quarterly decline for the series. So we're seeing these changes happening on the investment side that, okay, people are not investing as much, brokers and agents are not making as much money on selling investment properties to investors. And so we know that investors are thinking, okay, there's about to be a slowdown. Maybe I shouldn't invest in this property. Maybe I shouldn't add a new addition to this property or try to improve this property because I don't know what's going to happen with the banking situation and the economy and how that would trickle down to the residential side. And on top of that, something to consider is that when we see this happening, less of a demand happening, hopefully this will put pressure on home prices and bring it down. Another reason they say is a sign of consumer strength rose 2.9%. So even though residential investments have been decreasing, people are still spending a lot of money. And we know that whenever you start seeing investors start changing up things, but consumers are still kind of lagging behind, you know changes are happening. Hopefully this will change the consumers, their spending habits and bring home prices down, because even consumers are still paying a little bit too much for home prices. Historically, declining new construction and slumping residential investment have each acted as early warning indicators of an economic downturn. However, an increase in employee compensation in the first quarter has fueled consumer spending, buoying the economy as a result. So here they're saying that, hey, this is a telltale sign that we're about to hit a deeper recession, hit an economic slowdown, right? When you see this on the residential investment side. However, people are still getting paid more. Employers are actually increasing the pay of their employees. And with that, that will fuel consumer spending, which affects inflation, which affects the Fed keep on increasing the interest rate. All right, so the next chart on Zillow I want to talk about is understanding affordability that they have right here. And this chart right here is just explaining the percentage to someone's or a household income that they have to bring forward to purchase a home. And when the housing market crashed in 07 and 08, that was as high as 33.1%. Even though home prices were way less back then, it was still expensive for a lot of people. And it required people who wanted to put a 10% down payment on top of all the closing costs, insurance, and just different things, property taxes. That burden was 33.1% on someone's household income, right? And my rule is like you shouldn't spend more than a quarter of your income on a house. And so if you make $4,000 a month, you shouldn't spend any more than $1,000 total. Like that includes insurance, property taxes, and the mortgage, of course. And so it should be less than $1,000 if you make $4,000. And so it hit as high as 33% back in '06, and then that really started to go down when home prices went down. And you have to understand that this took several years to hit its bottom. It took 6, 7 years for the housing market to truly hit its bottom. And right now we're at the point where it's requiring people around 24%, which is not as high as 33%. And so maybe that's another telltale sign that it is increasing. The more it increases, the more volatile it is to fall. And the thing is, we actually want this to fall. And so hopefully this can go down sometime soon, or we can reach its peak where it prices people out not naturally. And because of interest rates, and everything, it's just higher. Another interesting, map that they have is just information about this. So you have home affordability map, 20% down. So, but you see on the West Coast, 73.6% people are spending for a mortgage to put 10% down. Some people it's 51%. Even in parts of Florida, 54%. And then in the South, you have 28%, 37% in Atlanta. This is where you want to be around like that 25.5% in St. Louis. So that's not, actually Chicago's not that bad, 27.8%. But yeah, you see the different charts, how much it requires for people to put down. And you see the darker it is, the worse it is. And the lighter is the better. And then years to save. And so this takes into account, your household income and different factors and how long it would take you to save that amount of money. But yeah, you have that right here and that information. All right, you all, let me know what your thoughts on the housing market and this new data that Zillow brought out. I think it was interesting just seeing the different facets of the housing market, looking at different data points to understand more about what's happening in the housing market. I think through this data, we can tell that, hey, affordability is still a concern for a lot of consumers, but at the same time, consumers are still spending the money needed in order to buy a house or just buy other things in general. But I think it's a good sign showing that investors are slowing down their real estate investing. And so once that happens, hopefully that trickles down to just regular consumers, which will bring down pressure on home prices. All right, you all, hope you all enjoyed this video. Be sure to like, subscribe, comment down below, and I'll talk to you all later.